What's crack-a-lackin' players, traders, and haters? Welcome back. It's your boy D, and this is D's Daily DD. Today, I am ready to get it. I got some good information to bring to y'all, as always. But let me start out by saying, not a financial advisor. This is not financial advice. Don't take it as that. Take it for educational and entertainment purposes only. Always make your own decisions with your own money, your finances. It's always good to do DD research, but at the end of the day, it's your decision, and you are in charge of your portfolios. Okay, now I'm in charge of mine. But I am absolutely just hyped right now. I am going to speak freely today. I had the day off. I've been super busy with work. Today I got the day off, so I'm gonna spend it with my YouTube family, right? And I think we are gonna see something. I know it's been so fucking frustrating, honestly, right? Being in this play for almost 2 years or whatever, and nobody ever thought that it would take this long and it would be this difficult or this strange and all that. But this is the current system and the stock market. And even though retail came in recently and started getting more involved in the market, the stock market has been around for a long time. And so those setups and those rules and regulations have been there for a while, right? So we have came in and found flaws and things that we think could be improved and whatnot. But in order, and all those rules, like the regulations, the phase six, the T plus 35, T plus 90, T plus whatever you want to call it, right? T plus your mama, whatever. It hasn't really had much effect from what I've seen in the stock. But like I said, I think I can see some light at the end of the tunnel. If we see something happen in the next few weeks with the price action, I can see where the move is going to come from and why, right? I'm paying attention to what's going on with the tokenized stocks and all that, but I think right now what matters is the cost to borrow. I'm going to give you details and the rebates, and I'm going to give you hopefully some education on that. I'm not going to care so much about the time of the video, how long it takes. I just really want to get all this stuff, off my head, off my chest, and I just want to, say that I'm holding for you because I know you're holding for me, and we're one big ape family. And I'm always out there looking and researching and doing DD, right? That's why I named the channel D's Daily Due Diligence. So, all right, guys, I'm so excited. I really want to break this down for y'all. I think it's simple enough to where you guys will understand because there's already so much information, and it relates to FTX with what's going on. It relates to the cost to borrow, the shorts, the timing, all that. Okay, guys. As always, right, please engage with the video. Leave me a comment. I love, talking with people, having conversations, giving each other our opinions, and hit that like button for me so we can spread it to other apes. I do think apes need to see this information, especially the ones that, have lost conviction and are like just not believing that anything can happen, but it definitely can, guys. Okay, this is the stock market. Anything can happen. We've seen some crazy shit happen, like when with HKD, right? You've seen with GameStop, with AMC in the past, with Bed Bath and Beyond. You just never know when that move, that hit is gonna come, and that is the biggest, thing that frustrates, I think, the apes is that it's not it's not like most things in life where like when you do something wrong, it's wrong. When you do something right, there's a fine line. In the stock market, there seems to be a lot of gray areas, which, that's what I think sucks about it. There could be a lot of improvements with that. But okay, let me get my breath. Let's get to it. Let me go through this. Okay. So the main thing is the black swan event right now that I see. It's the liquidity crisis. From top to bottom, you've seen the past few months, rich people lose money, average people lose money, hedge funds, crypto, hedge funds, banks. A lot of people have lost money. So to me, this is good for what we are looking at. And all I really want to talk about right now and focus on is pretty much how AMC, within the past year, up until recently, had four floats. Okay. And now I'm going to explain to you what I mean, the way I see it. Make your own decisions is just my thought process, my opinion. So the reason you're seeing this cost to borrow fee, okay, skyrocket is because you had these four AMC floats, because on the crypto side, you had BitREX at 625 million coins, FTX 400 million coins of AMC, right? That AMC tokenized stock. But recently it's been shut down and suspended according to Bitrex. And then we know FTX is locked up, right? There's not much movement going on there besides the hacks and so on. So you have this, but I'm not even worried about the quadrillion because the 8 quadrillion, because that's not even, it wasn't stated that it was backed by anything. This was actually, you know, supposedly backed 1-to-1, one share of AMC or Ape to FTX as well. So one share to one coin. And then we know AMC has had, right, supposedly 516 million Class A shares in the float for a while. And then when Ape was released, it was a 1-to-1, so it was 516 million. Supposedly backed 1-to-1. Now you're like, well, if there's only 516 million AMC, how can it be, you know, that there's this amount of coins that were there? But hear me out. If you put these together, that's a billion, right? With the Ape. You go back to Bitrex, FTX, if you put these together, that's about a billion too. So remember, Ape is AMC. So not in the stock market, no, you can't cover Ape with AMC on the shorts, right? Because when this got split, they were now short one AMC and one Ape. Now, when it comes to crypto, we all know that it was unregulated, not certain rules, a lot of gray areas. So I think they might have been using the Ape shares too recently, right, to back this. Okay, just my thoughts. Now that these are gone, these are suspended, shut down because they were supposed to be backed 1-to-1, is putting pressure on these stocks, on the stocks, because the cost to borrow fee is rising. As of today, it was 96.3%. It's been high for almost a week. And this is what matters to me. This is what is going to crush the shorts because it's directly tied to their short position. If you don't know how high this is going to keep going, in my opinion, why is it worth it shorting the stock when you're paying a huge fee, right? Depending on if you're short 100,000 shares, 200,000 shares, 300,000 shares, 500,000 shares, whatever. Whatever you're short on, that's what's going to cost you. And it's an annual rate, but it still has skyrocketed, right? And I'm going to show you the graphs and all that right now in a little bit. But then let's break this down, right? So the fee, the cost to borrow fee for the shorts that are paying the lenders, which are your brokerages like Robinhood, Fidelity, even BlackRock, that were lending the shares out. Now, to me, it looks like they have 0 shares left. Now, people have been questioning, like, well, what is the lender doing right now? What is a rebate? So let's talk about the rebate. The lender is trying to pay the customers a rebate right now, and they are offering 92.47%. So that's what the rebate is. You have the short seller paying the lenders, but right now they are out of shares. So now the lenders are starting to look in their customers' portfolios, right? The way I look at it with this fee, whoever wants to lend out their shares, they're paying a lot more money right now. But I am definitely not lending anything out. I have all the stock lending off. So there's that. And then all of this that's happening with this cost to borrow reminds me of May to June 2021. And now let's go and look at the proof. So why do I say it reminds me of May? Because these are my screenshots that I took off iBorrowDesk, and this is the last time that the cost to borrow fee had skyrocketed, right? So May 7, 2021, it went from 11% to the next one. It was rising, right? By 5.7, it was at 25%. By 5.10, it was 59%, 56%, just absolutely moving. And then the peak the last one that I could find of these screenshots, these are mine, from this time, 5.12, was 90%. Okay. Keep that in mind, right? Now you go and you look at what's happening right now. And is it this one? No. And we look at the cost to borrow fee right now. And this is where I was actually right. I predicted this would happen, and I was correct. You can go back to my past videos on these dates. There was like a week, 2 weeks before Halloween. I said, when the interest rates go higher, this is most likely going to cause this to go up. And I thought maybe 30%, 40%. I didn't know it was going to skyrocket to 100%. But that's the liquidity crisis that is happening right now. So we go back here, and Oh, it came down right now. Look, that's an update. All right, so it was at 96%. Right now it's at 61.2% according to this. But I wanted to show you this graph too, right? When it was at 96% earlier today, 350,000 shares available to borrow. And then we went 4 days right here with 0 shares, right? That's what caused this to skyrocket. And this is all live. This is all happening because of FTX, right? All that stuff that is going on. So we know there's new short sellers. This is for AMC. These are the short interest ownership right now. And you have all these companies that have been shorting, right? These are the recent dates. So we know there's shorts on the hook right now. Citadel has 4 million shares in puts. We have just tons of shorts. This Coron Capital puts 2.5 million shares on the 14th. So these are Susquehanna, 10 million shares. Jesus. EMG Holdings, 10.2 million shares puts. So there's some heavy puts because they do not want it to cross $8. There's a lot of call options that could definitely cause a gamma squeeze. So I wanted to show this. Let's refresh it, see if it'll bring it down. No, still saying 96% here, saying 61% here. All right, now when you look at the graph, this is my charting. This is what I'm predicting. It's not guaranteed. It's not saying that it's 100% going to happen, but I could see this happening because of where we are on the chart. So you got the big push here. You have that little flag, the little consolidation, and I think we're about to rip up higher. You know, that's just my opinion. And the hard test would be this one where we could get a huge breakout up to 1620, and then we have to see where everything's at then. But the crazy thing is how it mimics. This is back in June. You had the big pop, came back down, and then we squeezed, right? So this right now, it looks exactly like it. Coming down, you rip, you have a little, consolidation, a little bull flag, and then the move comes. And the RSI is in a great spot. The MACD is in a great spot. So my position is locked and loaded. Do what you got to do. Also, because of GameStop, the meme stocks are connected. Nobody, well, I shouldn't say nobody. I mean, a lot of people were paying attention to this time in GameStop, but we are all waiting for this move, right? When you least expect it, you have the explosion. This is what everybody wants, right here. And how does that happen? With crazy numbers, with crazy data, with crazy situations that happen, liquidity. Boom, you get the pop. Oh yeah, and then when I put on my my super trend, this hasn't flipped green, right? We flipped green on 11/11, started making moves up. Back here is the last time we flipped green on 7/11, and after that, what happened? Came up. So I'm very bullish right now, guys. Very bullish. And again, it goes back to the cost to borrow and what is happening with these tokens. And then the last thing is, well, with GME, this is GME. This looks like it's getting ready to flip. It's consolidated long enough, bounced in this range, and it's at the end of the triangle here. This has to go crazy up or crazy down. It's already been in a downtrend. So I personally think it's going to flip to green, and we're going to see some movement on GameStop and AMC because they've always ran together. Remember that. And here's the proof for so the cost to borrow fee was at 96% today. And this is the rebate. You see this negative rebate, right? And people are like, well, what does that mean? Let me explain it to y'all. This is the cost to borrow fee. Absolutely nuts. From down here, from 10% when the whole FTX thing, that's why I personally think it's so correlated, so connected, that they lost that side, right? The crypto where they were probably, hiding shares and short interest and leverage and who knows what they did. But now on the stock side, which is where the apes are, the retail side, and is in the stocks, right? AMC and ape. That's putting pressure on the short side over there. Okay, so a stock loan rebate is a cash payment granted by a brokerage to a customer who lends stock as cash collateral to short sellers who need to borrow the stock. who need to borrow the stock. They were paying 74. Now it's 92.47 as of the latest update. So need to borrow stock. A positive rebate fee means the lender pays the interest to the broker dealer. Let's see. A negative rebate fee means the security is hard to borrow and the broker dealer pays the interest to the lender. So the broker dealer, your Robin Hoods, your Fidelities, are paying it to the lender. Now they're borrowers now, right? The apps or whoever is now borrowers because they're borrowing from their customers, right? Wherever they can find the shares. There's the tokenized stock. I have been tweeting, I have been saying over and over, like, we need information on this. I saw the video by the Common Sense Investor. He says that AMC knows about it, and in his opinion, right, that they caused, or they issued the token and worked with FTX to issue the token. I don't know if that's the case personally, because what doesn't make sense to me is the money. Where's the money? So if they did do all this, AMC, they should have disclosed it with their shareholders, right? They should have put the information out, how much money they've raised. And I don't know. I can't say. I don't know if they're, that's what I'm trying to find out, is if they are connected, if they know or played a part and right, or were involved and made money off of it, because I think they would have to publicly post that information. Okay. So let's just end this video. That's the most important information, but let's just wrap it up. I was going through, of course, some tweets. Important stuff. Biden administration will ask Supreme Court to allow student loan debt relief program to resume. Another breaking news: Nancy Pelosi steps down as House Democratic leader after 2 decades. These again, people are noticing, right, that the BitREX and the FTX coins were supposed to be backed 1-to-1. Everyone's watching that. People talking about the fee, the rebates, crazy fees. The FTX debacle is out of control still. FTX lent Sam Bankman over $1 billion for personal use. This thread is insane. FTX used customer funds to buy houses for employees. FTX didn't have a list of employees on what they did. FTX did not keep any books or records of its digital assets. Alameda Research was exempted from auto liquidation on FTX. Just absolute mess there, right? Not the way a huge crypto company should be ran. But yeah, guys, thanks for coming. Right now, right, just my hours have been slim, just busy. Holidays are here. I've been having to do stuff in my personal life right now, so that's why I haven't been able to make videos every day. But when I can, I'm here for y'all. Like I said, I'm still holding. I see the light at the end of the tunnel, and I can't guarantee you guys anything, but this fucking thing needs to end, right? Because people are frustrated. It's been a long time, but we're here. We're still holding strong. And like I said, I think the 1-to-1 and the crypto and how it's supposed to be tied, I think this is what can cause a parabolic move. And it's, again, with the timing, with what's going on with liquidity, the crunch, I feel like this is what can cause a lot of these shorts to break or get pushed out of their positions or get them to tap out. And that's what we need in order to get this price action to start skyrocketing. All right, guys. As always, guys, stay positive. We're strong. We're hanging in there. Multiple eyes are in this, as always. Okay, so shout out to everybody who's hanging in there. But I'll catch you guys in the next video. Hope you have a good rest of your day.